What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel focuses on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be used to trade any company that's publicly traded in the US stock market. Make sure you hit that subscribe button and that notification bell. We do release videos every night throughout the week except for Friday and then once on the weekend, but we also release bonus content from time to time. Our nightly videos focus on identifying the triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leap trades as well. If you want a deeper dive into how we set up our charts and trading levels, check out the bonus content on our YouTube page. And for the information about the strat, which is the base of our charting and trading method, you can find more free information in the description of this video. Let's go ahead and take a look at the agenda for today. We'll go ahead and recap today's intraday price action. Then we'll take a look at the week, month, quarter, and year perspective. This becomes a little bit more important, especially on a day like today, because tomorrow marks the start of a new month and a new quarter. After we zoom out, we'll zoom back in and set our 4-hour markers and the triggers and targets for tomorrow, which is Wednesday. And we'll do a quick review of the triggers and targets for the week, since we're not entering a new week, we're dead in the middle of it. But we'll review the new triggers and targets for the coming month and quarter, and we'll just do a quick review. Quick review of the targets for the year after we get done with the new triggers and targets for the month and the quarter. So just looking at today's price action, we're looking on the 5-minute. You can see, again, the general rules that we go by, at least to start the day out, are higher lows at or above opening print. We want to look at getting calls to scalp to the upside, first targeting the overnight high and then previous high day. Whichever one comes first is the first target. Whichever one comes second is the second target. And then if we get lower highs below opening print, then we want to look to enter puts, targeting overnight low and previous low a day. Again, whichever one comes first is the first target, and again, the second one is the second target. So you can see today we have this opening print here at 34.07. We got a little bit of yesterday's action in here, but we opened here, got an initial push down and the bounce off this 150 fib extension. This is, again, that fib extension of the September 17th gap and go that we had. If you're familiar with this channel, this should be familiar to you, but if you're new to the channel, we've looked at how this level has come into play many times over the past week plus at this point. Anyways, we did get a bounce off of there, a push up. We're back above opening print at this point, so we're looking for your higher lows above there to get involved on calls. You can see we get the higher low here. Once price breaks above the high of this 2 down, you can enter calls. We got the higher high followed by a higher low. Again, another higher high, higher low, but then we've got the equal high. So we've got to look at that point as to when we want to exit the trade. You could keep things on a 5-minute time perspective, or you could go down to the 1 minute. Another reason why that we could expect price action to, if not reverse at this point, at least give us some price correction is we've got the 4-hour trigger to the upside here. We already triggered it to the downside early on, so this would make it a 3 or a bullish engulfing candle on the 4-hour time frame. So we've got that, which is a point of inflection, but it lines up with this 1-hour downtrend line. And again, we don't put a lot of faith in trend lines, but when they do line up with horizontal lines that we have on the chart, then we put a little bit more weight into them. And we can see here we did get the equal high, a slightly higher high, but we did end up getting the lower low. So not a lot to be had here to the upside. Stopped out even unless you went down to the 1 minute. Once we got this looking like an equal high here, and you found something on the 1 minute to exit up a little bit higher, but again, not a lot to the upside. Once we did get into that exit of that position, at that point some time has gone by. You can flip to the 15-minute time frame at that point, and oops, I didn't mean to widen that out so much. And you can see that we did get a higher high on the 15. So even though you would have had to exit the scalps that you had, you could have stayed in the trade, looking for a higher low above this low right here to continue something of an uptrend from the 15-minute. You didn't get that if you're the bulls, right? You got the higher high, but you ended up getting a equal low but a lower high after that. So you could have waited to enter on the 15, probably a lot safer play. But if we go back down to the 5-minute, let's see, kind of the same thing, right? Unless you just decided to get into puts at this point, you kind of miss that dip, right? You get the lower high here. Even that's above opening print, but it's close enough to opening print that, it's not too much extra risk that's added to that trade. I wouldn't be mad at anybody for getting into that trade. You do get the lower high, but then you get the higher low. You wouldn't need to be in on the 15-minute to get something good out of that, right? You would have got stopped out of this one. You would have had to look for this lower high here to get into another trade. Then you could have wrote it down to this 15-minute broadening that was from Monday, late Friday, I think it was. Let's bring it in here. No, it was Monday. No, this was late Friday, right? Yeah, so we had this 15-minute that Monday gapped above, but then we saw that kind of rejection here off of it yesterday, and that is what started the drop. We didn't quite make it to it, so you can see here we actually made it to that 15-minute broadening. Also lines up with this 138.2 fib extension of the September 17th gap and go. So you can see again the broadening formation lining up with a point of inflection from a horizontal level perspective, and we got the bounce from there, right? So wouldn't have really got much to the upside in the morning, wouldn't have got too much to the downside in the morning either, unless you were really precise on your entries and exits. You really would have just got this move here. It would have been harder to get this move. There was no trigger, and this move here wasn't big enough between the entry and the exit to make any type of real profit. So this would have been your first real profit that you had had, unless you just, for whatever reasons that you have, bought puts at this point right here. And then, if you bought calls noticing that it was hitting this 15-minute broadening, hitting this 138.2 fib extension, which has been support for a long time, you could have got into your calls even though you were below opening print. Again, just knowing it has a little bit more risk to it, so you might want to, not enter so many contracts at the beginning. Kind of scale in as you get these higher lows here, or wait till you get to the opening print to really add to it. Either way works, but you just continue to get higher lows all the way up into the close. So we'll see how things continue to go. If you have contracts that expire this week, it would have probably been a good idea to unload a good chunk of them, if not all of them, by the end of the day. A little bit more risk overnight depending on where your strike is. You could have some decent theta decay, but if your expirations were not till next week or beyond, I wouldn't be mad at anybody for holding on to those overnight. Looking at overnight, SOXL is down 1% overnight, but again, a lot of economic numbers being released this week, so more than likely, well, I'm almost guaranteed that being down 1% is going to be different by the time the market opens. Whether we're down more than 1% or we're back positive, no, I couldn't tell you, but we'll be at a different price level. Let's see, right now it's 34.51. We closed at 34.84, so I'm pretty sure we'll be at a different level by the time we open. So we'll go ahead and look at things from the day perspective. I think that's enough from the scalping perspective. Let's bring out a better chart here. And we can see that we got the higher low on the day perspective, right? So we've got the 11-week range that we were in here from 4 to 28. We got the push up and the higher low above 29.66 last month, or the previous month's high. And we got the shot up out of here. Got a higher low from the day perspective, made a higher high. Looks like we're putting in a higher low today as well. So if we go 2 up on the day tomorrow, that's definitely a higher low, and that's continuing this uptrend. How high we go, who knows? We got a market makers expected move high up here at 37.23. Which is reasonable because that would bring us in line with this daily broadening formation. If we do, push through that, just because it's the market makers expected move high, that doesn't mean price has to end there. If you're not familiar with market makers expected move, check out our weekend video where we go a little bit deeper into that. But we do have this gap up here at 35.09 to 35.35. So that could be a magnet as well. That brings us more in line with this weekly broadening formation that we got here, this purple line. right? These orange lines are daily broadening formations, purple lines are weekly. Again, check out our bonus content to get more a deeper dive into how we set up our charts, what colors are for what, and what lines mean what. But things are looking pretty good from the day perspective, even though we did have that initial pull down. I guess not initial, but midday pull down. We were able to recover from that and get a good push up, finishing the day green, hammer-esque type of candle. Not so much of a wick on top, bigger body, but we got wick on the bottom. So price action tried to explore to the downside, but was not accepted. Looking at the week perspective, we're 2 up still, but we came back within last week's price action. Let's bring them. Yeah, there we go. So we did clear last week's high, but we've pulled back within it, and we've closed within it for a second day now. So we do need to watch out that this doesn't continue to push down or even stay red. This could be marking kind of the high of the move from a daily perspective, maybe even going into a week perspective. But we've been putting in higher lows, so this is a higher high in the sequence, and even if we do pull back, it's perfectly reasonable. We're just looking for higher lows to get re-involved again. We're trying to get this higher high of 36.15. Again, this number is going to come into play on the week, month, and quarter perspective, but that 36.15 would give us this higher high as we were going down last year, at the beginning of last year. This was the highest point that we had, so or earlier this year, I'm sorry. So we want to regain that high point and continue to push up into this that gap that we talked about at 39. Got a couple more gaps to the upside as well. So continuing to push up. From the month perspective, we've got a 3 solid 2 up, looking to go 2 up again next week. I'm sorry, this coming month. Next month is this coming month. Bring out a little bit, take those off, and we can see here a little bit easier that we are in this 3 combo 2 down, combo 2 up, right? So the magnitude would be the high of this 3, which is that 36.15, again coming into play. So if we do get the 2 up next month, or this coming month, which just starts tomorrow, our first target is at 36.15, and we just want to continue to push up from there, make this higher high on the month perspective, which is the 41.19. If we look at the quarter perspective, again, we're doing very well. We triggered the 2 down, 2 up, almost reached magnitude, right? So the magnitude here is 36.15. So we had the 2 down, 2 up. Magnitude is 36.15. Again, that magic number. From the quarter perspective, if we go above 36.15, that triggers a 1 combo 2 down, combo 2 up on the quarter. And that magnitude is the high of the candle to the left of the 1, which is that 70.08. So not saying we would reach that at the by the end of this quarter. Again, not even saying we would make it by first or second quarter of 2026, but that would be the target as long as we stay above this 36.15 level. Again, from the year perspective, we've turned things around from where we started out. We had the 1, 2 up, 2 down trigger. Didn't quite reach its magnitude, but that's okay. That leaves us with a higher low from a year perspective. If we can continue this push up, or at least keep this hammer candle structured, then we're looking in good shape to go 2 down and then 2 up in 2026. That target would, or that magnitude of that move would be that 70.08. Brings that back into picture again. So again, not an all-time high, but we would be pressing the highs at that point, and looking to go above and beyond. So 2026 could be a pretty good year, a pretty big year. So we just want to keep everything in perspective. That's our zooming out for the week, month, quarter, and year perspective. Just looking at just the month real quick. We've got the new target for this, right? Again, we're in this 3 combo 2 down, 2 up. It would trigger at 35.49, and the magnitude is 36.15. We'd have the extended target of 41.19 at that point, and then 46.79 if we were to reach that in the month. That's a pretty big move, so I don't know that we would get all the way there, but if we do, those will be the targets on the way up. On the way down, if we do, if this turns around, we breach below the low of last month or the September, below the low of September, that triggers at 2380 and has a magnitude of the low of this 3, which is 2257. So not a lot of magnitude there, but there is this gap that we have at 2257. Go ahead and make this a little bit bigger. All right, we've got this gap down here at 2257. If we do come back down, we could possibly fill this gap. If we go any further, though, that brings us back down to below this monthly downtrend line that we that started midway through last year and continued through the beginning of this year. Brings that back into play. We haven't taken it off the board just yet. We've got a higher low, around this level, but we're really looking for a higher low above this line to really take this downtrend line out of play. So not only do we have this gap here, we've got a gap down, we've got a couple of gaps down below. So I think we'd have to have some pretty bad news for price action to go that far down, but it is still just a possibility. We've got to have those things marked out in case it does happen. We're ready for it, right? From the quarter perspective, it's a new quarter. We're just looking to continue this 2 down, 2 up to reach this 3615. And again, if we reach this 3615, we got 7008 as the target. So just looking at those from a numbers perspective, if we go to our notes, we can see we've got new levels for October, new levels for quarter 4, those levels we just read out. And that means that, of course, we've got to blank out the month and the quarter flips up here. We know that the week flips green at 35 flat, the year flips red at 28.13. We've got to wait for the month and quarter to open tomorrow before we can put in what those flip levels are. But again, we've got our gap above at 39.05 to 39.35. That's kind of coming into play the closer we get to it. So from the month perspective, again, 2380 is the trigger to the downside. Magnitude is 2257. But if we just continue that trend to the upside, we're looking for that 3615 and the continued upward movement on both month and quarter perspective, right? So let's get back down into our triggers and targets for the intraday and day trade perspective. Let's go into tomorrow's scalping, right? And we won't drag this out too much, but it's basically the same thing that we talked about earlier today, right? So say right now overnight high is 34.20. So let's say no, overnight high has got to be up. It's 34.55 right now. So 34.55. We'll just put it right here so it's not to be exact. But all right. So we've got our overnight high there. So we've got for tomorrow. Oops. We've got our week flip right at 35 flat. That's where the week goes green. We've got previous high a day. So today's high, which is 34.96. We've got the overnight high of 34.54, overnight low of 33.60, and our previous low a day down here at 33.57. We've also got to keep in mind the last week's 50% line, this 33.33. Looks like we were going to test it, but we bounced just above it. So I know we've seen like QQQ went and tested its 50% of last week and bounced exactly off of it. So if we do get some more pullback tomorrow, that could be a good bounce point. We've got a hourly broadening formation here, a 4-hour broadening formation here. So depending on how long the drawdown takes, if it does draw down, we could see this as a good bounce point. We've got a lot of things lining up at that level. But if we do open up, let's say we open up here, got opening print at 34.24. If we get price action to the upside, say we get a little rejection here, but then we get the higher low, we want to enter calls. First targeting overnight high, second target is previous high day. If we open at 34.24 and we get a push down, and then we get a little bit of a push back up, but we get a lower high here underneath or at opening print, and we want to enter puts targeting overnight low and previous low a day. Now they're pretty much the same level, so how you want to scale out or totally exit a position is up to you. Only you know your risk, only you know your portfolio value. So that is your call, but that's what we're looking for from a scalping perspective. From more of an intraday perspective, intraday to like overnight swing perspective, We do have this 4-hour downtrend line. It's a soft lower high right here. Looks like we're already defeating it, so this could be off the board tomorrow. But we've got this 4-hour broadening formation and this 1-hour broadening formation. We do have the daily broadening formation up here, kind of aligning almost perfectly above tomorrow's first 4-hour candle with the market maker's expected move high for the week. But again, we do have these gaps up here in the weekly broadening formation up here, so we could easily press through the daily broadening formation. To the downside, again, we've got this 50% of last week. If we do break through and go down further, who knows, we could even test last week's low. There is a little bit of a gap to fill that we didn't finish filling. From a strat perspective, candle structure perspective, if we do get price action to the upside, that would be a 3-2 up. So we do want to watch for any rejected action here at this, 4-hour broadening formation or last week's high. If we, poke up and then start getting rejected and we come back down and we have like a failed 2-up, we want to watch out for the 3-2 up, 2 down in the second 4-hour candle tomorrow. So just keep that in mind. If we do go, it's just the same thing in reverse, right? If we do push down and say we find support on last week's 50%, that gives us a 3-2 down and possibly a 3-2 down, 2 up into the afternoon tomorrow. So really can go either way tomorrow. A 3 or an engulfing candle is, in my opinion, a lot like an inside candle, but just with more volatility, right? It's indecision, right? It tried to go down. It went past the previous candle's low, but then it went back up past the previous candle's high. So indecision, right? A 1 or an inside candle is, it tried to go above and tried to go below, but couldn't. So indecision on just a bigger level. So that's why you need to watch out for follow or continuation after that first 4-hour candle, right? You want to get the 3-2 up, 2 up, or a 3-2-1, 2 up, or something like that to just continue it on. But you need to keep in mind it could reverse with the 3-2 up, 2 down. It is one of my favorite reversal patterns, so I do like to keep those very close in mind. From the day perspective, again, we've got this range here, the break, the intraday retest of that break level, and push up. So again, we've talked about it before. If we do continue to break down, we could go make a lower low, test this broadening formation. Depending how long it takes, we could be just testing the last month's high or the high of, August 2026, the origination of this breakout point, because again, we've only retested it from an intraday perspective. We haven't retested it from like a day or a week perspective. So we could see continued push down tomorrow, depending on some of these economic numbers that could, fuel the fire to the downside. So we just want to keep that in mind. If we do get price action to the downside, that's going to be a 2 up combo, 2 down, triggering at 33.57 with a magnitude of 32.83. And then we could get the continued, combo 2 up, combo 2 down, targeting the low here last week of 31.36, which again is right above this gap, and we could get that gap fill. So keep that in mind. Market maker's expected move low is just below that gap, so it's perfectly within reason to expect price action could go down there. I'm not saying it's going to go there. We're not making predictions. We're just being ready for whichever way it goes. Conversely, if we go to the upside, we would have a 2 down, 2 up, triggering at the high of today, which was 34.96, and targeting the high of yesterday, which was 35.49. We've got some extended targets that we can bring up. If we look at like our scalp chart, and we look at the this 238 fib extension, which was the most recent high to low in that 11-week range, that lines up with this 261.8 fib extension from the September 17th gap and go. So I'd look at this 36.45 level as another target point for a continued push up if we go past the magnitude for the day. All right, and we've already talked about the week, so I won't go into that any further. Those pretty much are triggers and targets. If you want to look at it from the notes, we already went over our month and quarter and year. We talked about the week as well. We have gone 2 up. It triggered, but we've pulled back in, so that's why this is just underlined and not in bold. So it's gone above 35.30, but we haven't reached that target of 36.15. But for the 4-hour perspective, again, we would have a 2 up, 2 down if we get price action to the downside, triggering at 33.99, magnitude of 33.86 with extended targets of 32.83 and 32.59. To the upside, we would have a 2 up, 2 up, so no reversal there. That should be a target, right? Because we don't have a reversal. That's a continuation pattern. Oops, if I can type. Right, so we've got our targets of 35.49, 35.95, and 36.15. There's that magic number again. From the day perspective, especially if you want to swing overnight, we would have a 2 up, 2 down to the downside, triggering at 33.99 with the magnitude of 32.83, extended target of 32.39 and 31.14. To the upside, we would have a 2 up, 2 up continuation. That's so no reversal, no magnitude, just targets after the clear trigger. So the trigger would be 35.49, targeting 35.95, that magic number 36.15 and 36.50. All right, so there's your triggers and targets. If you need a little bit more time looking at these, go ahead and pause the video, rewind, do whatever you need to do. But those are what we have for the coming day and the week, month, and quarter, since again those are flipping. If you enjoyed this video, if you made it to this point, please make sure you're giving it a thumbs up. It really helps the channel grow. We're just trying to spread as much free information as possible, both about the SOXL ETF and the benefits we find from trading its options from the high delta to low theta for the low premium or price entry with a very high underlying beta with very high beta on the underlying ETF, right? Those give you a good recipe for minimal money in for maximum money out, right? So that's one of the reasons why we use it as a daily money maker for us, amongst other investments that we have. Also want to spread the word about the strat, and then also just the little nuances that we throw onto it. The repeatable scalping strategy that we have with the 4-hour markers, the previous high of day, previous low of day, overnight high, overnight low, and opening print. They come in really handy. And again, another way that you can add some consistency and a repeatable proven strategy to trading any ticker symbol, right? It doesn't work just for SOXL. You can use that for any ticker symbol, especially for opening the very early parts of the trading day, right? They give you a good guide that you don't have to be scrambling back and forth on where you think it's going, and in alignment with some 20 MA or 50 MA or something like that, whatever. Makes it just real simple. But anyways, I hope everybody enjoyed today's video. I hope you've been having some good success over the past few weeks, ever since this channel has gone live. I hope we've been helping some people make some consistent money. We've just got to trying to spread the word, and if you are making that consistent money, let us know in the comments. But anyways, get some good rest tonight. Wake up refreshed tomorrow, and we'll look forward to trading with you.